Trish is here with us now for a lot of the viewer emails, but before we get to those, the Chinese yuan, Trish, has there been any repricing of the timing of when that is going to appreciate again, given the very upbeat second quarter GDP we got this week?
Well, there has been a little bit of repricing, just a little bit. The 12-month NDFs and the non-deliverable forwards is now suggesting a 0.8% appreciation in the Chinese yuan in 1 year from now. This compared to last Friday, it was just pricing in 0.6%, and that's before the GDP report came out. It may not look like much, but if you look at it from the start of the year, markets were actually pricing in a yuan depreciation of as much as 2.5%. So it is making a little bit more, quite a bit of a comeback actually. But traders are not expecting big moves here. They're saying that exports are still sluggish. Inflation is, in fact, still in deflation at the moment, China. And therefore, the authorities might not be in a hurry to boost the yuan anytime soon. And they also noted that the pressure from the U.S. is, the rhetoric's out there, but the action is not, of course. So any form of monetary tightening, as far as loan growth are concerned, will largely stem from rate hikes or rises in bank reserve ratios rather than boosting the yuan. The Bloomberg survey is actually looking for the spot dollar-yuan to end the year down just slightly, about the 6.81 by year-end, 6.82 by September. We're about 6.83 now, so it's really baby steps, but it's still heading in that direction. Kathy?
It really is baby steps. Trish, let's bring in Richard Yetsenga to the discussion. He's here with me, the Forex strategist at HSBC Holdings. Good to have you with us, Richard. So is this as good as it gets for the yuan? Is that going to move any stronger?
Well, no. Look, it could get better. I think probably what our view is that there's still lots of headwinds to appreciation, not just headwinds on the policy side. I mean, Trish was speaking about, still worries about the strength of the recovery and exports, but also the fact that trade surplus has come down a lot and probably will stay very weak. If you think that China's going to be the growth engine and the developed economies are going to stay weak, then the days of 10% of GDP trade surpluses in China are gone.
Richard, if you do want to trade the yuan and you do want to play on the NDFs and the yuan appreciation story, what kind of trades would you be suggesting if you're, like market, like yourself is also, thinking that, any steps will be very slow? Do you expect that, do you still suggest that people go into this trade?
Well, if any steps are very slow, there's probably not much in the NDFs, although as you pointed out in your introduction, they're only pricing, well, a little bit less than 1% in the 1 year, which is almost zero. If China does end up appreciating, then it's probably going to end up being, somewhat more than that. So if you do believe in appreciation, then the market doesn't look overpriced. Probably the way I'd prefer to play it is to look for currencies where you think, there might be more favourable fundamentals anyway, like Korea, which will also get a boost if the renminbi appreciates.
We'll get to the Korean one, Richard, but I wanted to ask, when would you consider the yuan as fairly valued? Is it really now all dependent on where the trade surplus goes?
The trade surplus is a big part of the story. I mean, if you look at a lot of the things that people point to speak about renminbi valuation, a lot of them ultimately come back to the size of the external balance in China and the size of the trade surplus. And, this is why I think it's important to really, for people to think about what the trade surplus is doing. Last month the trade surplus was $8 billion. At the beginning of the year it was $40 billion. And most people are treating those sort of $8 billion numbers as outliers and something which is temporary and will go back to large surpluses. I just don't see it.
Not until the recovery happens.
The global recovery has to happen. And I think if you ask investors now what is the least likely outcome globally, I think people will say that the developed economies of the US and Europe have a strong economic bounce. People are looking for the growth to come from emerging markets, not the developed world.
Richard, Trish again. We have Anjali Hazari in Hong Kong. He wants to know, where do you see the yuan and the Indian rupee in 6 months from now and in 1 to 2 years' time?
For China, in 6 months' time, I'm still pretty confident that the renminbi will be somewhere where we are today, 680, 683, somewhere around that kind of area. In 2 years' time, Given the trajectory that the Chinese economy is undergoing relative to the world, and given its intention to more forcefully internationalise the currency, it will probably be stronger in 2 years' time. I just don't see the trigger for that policy strength, anytime soon. In terms of the rupee, at the end of the year we see it at 54, so quite a bit weaker than we currently have, primarily on the view that a lot of the rebounding growth in India is fully priced by local assets, but yet there's lots of risks in terms of fiscal deficits and a re-widening in the external balance.